So pleased to introduce our chief economist, Michael Kokalari. Now, many of you read Michael's insights for the last several years. We're very fortunate to have an economist with his experience, with nearly 20 years in Vietnam and over 10 years at VinaCapital. Michael is not only often right, but is also willing to take non-consensus views, which I think speaks very well about VinaCapital, but also Mike's willingness to be out there when oftentimes he is early and still right. So I'm very privileged to hear Michael's views on the economy today and certainly the outlook for the future. Thank you.
All right. The theme for my presentation today is firing on all cylinders in 2026. So an engine has got, cylinders or pistons. And the metaphor that we're trying to make here, the analogy to Vietnam's economy, is that this year, in 2025, the GDP growth is very strong. You probably know that already. But it's really being driven mainly by two things. And the first thing is very strong exports to the US. And the second thing is very strong tourist arrivals from China. Without those two things, the GDP growth would be much lower this year. And that's because the domestic consumption by local consumers is kind of weak. It's not like super weak, but it's a bit weak. So that cylinder is not really completely firing. So what we're expecting for next year, 2026, is another very strong year for GDP growth, but much more balanced with all the cylinders rebalancing. So on this cartoon illustration that we've made, we also put the reforms that we are very, very important, and how we're thinking about those reforms is kind of facilitating or lubricating this rebalancing of the economy that we see happening, both in the short term and actually more importantly in the long term. So I'm going to talk more about that later in my presentation. You're going to hear a lot about it during today. But this idea of the reforms kind of lubricating the rebalancing, I'll give you the punchline up front, which is that we think that the government reforms will ultimately add about 2 percentage points to Vietnam's long-term growth potential. Now, we did our own analysis to come to that conclusion. Recently, I was on a panel discussion with some very smart economists from the IMF. They look at it in a more kind of technical way. They use what's called the DSGE, Dynamic Stochastic General Equilibrium Model, which is a more mathematical approach. But the important thing for you to know is that they also came to the conclusion that the reforms would add something like 2 percentage points to the long-term growth. Now, but that having been said, let's just start by talking about what's happening right now, this year, and what we expect next year. I mentioned that the exports are very strong, particularly to the US, up almost 30% in 9 months. This is a really huge number. We had really expected that the exports to the US were really going to roll over after the tariffs kicked in, and maybe even start shrinking. And that hasn't happened. So, given that resilience of the exports, what we're expecting for next year is kind of a normalization of our exports to the US. So not collapsing, but just kind of coming back down to more kind of long-term normal type levels. So that's the first thing that we expect for next year. The other thing is I mentioned that the domestic consumption is a bit weak. Actually, when you look at this slide, the real retail sales growth, so this is retail sales stripping out inflation, the number doesn't look that bad. It's like a little bit below pre-COVID levels. This number always used to grow around 8–9% pre-COVID. But what you have to keep in mind is all those tourists that have been coming. Foreign tourists are about 10% of retail sales in Vietnam. So if you strip out all this extraordinarily inflow of tourists, then spending by local consumers is growing at about a 5% pace. And actually, that number, the 5%, that's kind of also reflected in what the revenues that you would see of consumer companies. So like not super weak, but modestly weak. And I think my investment colleagues will talk more about that. So basically, we expect kind of a normalization of both of those things. High exports to kind of come back down to a normal type level, and weak consumption to come up to a more normal type level. So this is the first reason. Those you can see on the top here, those two things will kind of more or less neutralize each other. But the other thing that we expect for next year is that there's, as you probably know, there's an enormous focus on infrastructure investment. There's a lot, the government is writing checks. There's a lot of money that's been dispersed this year. We've tried to represent that on this bottom chart, where you see that over 40% surge in spending on infrastructure, but it hasn't really filtered through to the economy yet. The construction activity hasn't reflected all of that spending. Why is that? Well, you just think about it. When you embark on a big project, maybe you have to get all the approvals, you might have to buy the land, import the construction material. So there's kind of a latency or a time delay from the time that the money is spent until it actually hits the economy. So those things mixed together, the delayed impact of all the spending on infrastructure and the neutral of those two other factors, this helps explain why we think the economy is going to be very strong next year. What I'm going to do before moving on, so that's our picture for 2026. What I'm going to do before moving on to kind of substantiate the things, our projections here, is I'm going to show a few slides that kind of give some evidence or some credence to particularly the two things I just mentioned about the exports and the consumption. The first thing to note, this is a chart of the growth of real retail sales, and you can see that it's never recovered to the pre-COVID levels. And keep in mind, based on what I just said, that this number is even been boosted a little bit because of all the tourists coming in. So the reason for this, long story short, is that during COVID, households depleted their savings. And so what's been happening in Vietnam is their incomes are growing 6-7% or so, but their savings has really skyrocketed. We estimate that the household savings rate in Vietnam is probably about 10 percentage points above pre-COVID levels. Now, there's a couple different estimates of that figure floating around, but everyone kind of agrees that there's an extraordinarily high level of savings that's happening right now. Our analysis, if you look at this elevated savings rate and how long it's been going on, we think that by the middle of next year, households will have rebuilt enough of their savings to start to feel comfortable, not all, but all of their savings, but enough that they start to feel comfortable to spend at kind of a more normal type pace. So that's one reason we expect consumption to recover next year. And of course, the stock market being up like crazy, the real estate market's doing pretty well. The reforms also help to build, the consumer confidence. You mix all those things together, and we're expecting that, as I said, we'll have a resumption of normal consumer spending next year. We also expect the exports to be resilient and not to fall off the cliff, as I mentioned. What's happening there is a couple things. First, most important, is that this is the same thing that's been happening in Vietnam for years, which is multinational companies moving the production of products here, and particularly moving the production of high-tech products. So this is something from Tim Cook earlier this year. They're going to make more MacBooks here. They're going to make more like the Apple Vision, all this complicated stuff. Vietnam's exports of high-tech products, sorry, not high-tech, the phones are actually not doing that well, of laptops and electronics are up almost 50% this year. This is an incredible number because it's not starting from a small base. We already export tons and tons of computers and all that kind of stuff, and it's up like more than 40% this year on top of that. So this is the first factor that helps to explain why the exports have been very resilient. The other thing to mention is that we've completely shrugged off the tariffs. So Don kind of alluded to that in his opening statement, that what matters for the tariffs is what is Vietnam's level versus our competitors, countries like India and others. As long as Vietnam's tariffs are not more than 10% of our competitors, it doesn't have any impact on us because we have all these other advantages of the low wages, et cetera, et cetera. So we've seen no impact from the tariffs on exports, and certainly not on FDI, which is still continuing to flow in. So this has been kind of a non-issue. And the other reason why the exports to the US are very strong, this is again the idea that as long as the gap is not too big. The Chinese were very happy with the numbers that were negotiated, this 20% figure. The other phenomenon of why the exports to the US are very strong is, okay, so for me as an American, this is a little bit unfortunate topic to bring up, but there is this phenomenon that people call the K-shaped economy. So you think about the letter K, it's got kind of an upper part and a lower part. The metaphor here is the upper part of the K, these are affluent consumers. These are consumers in the US who own their own home, maybe have money in the stock market, have money in the bank. So now when the interest rates went up, they get higher interest income. So these are people, probably baby boomers. These are people that are flourishing. And what you can see on this chart is that, unfortunately, and I say unfortunately from kind of a social point of view, during my lifetime, my adult lifetime, the proportion of spending by these top-tier consumers in the US has gone from something like a third to like almost a half now. So again, it's unfortunate from a social point of view, but for us in Vietnam, thinking about our exports, we kind of only care about how the people on the top of the K are doing, and they're doing fabulous, as you probably know. There's a lot of articles in the newspapers now about, that the US economy, there's going to be a recession, blah, blah, blah. And the reason that that's not happening is because the newspaper articles are focused on the people at the bottom of the K, which is really unfortunate. But there is more and more recognition now of this phenomenon. We started talking about this almost a year ago. Certainly at the beginning of the year, we were talking about this K-shaped economy. And you see now that the others are starting to catch up to all the things that we were saying. These are some articles literally from the last couple weeks or a couple months. So this is one reason why our exports will remain resilient to the US. Overall, it's a pretty good picture. All the short-term metrics for Vietnam look pretty good. The only thing that kind of concerns us is that the level of FX reserves in Vietnam is fairly low. And this is one reason why the Vietnam dong has depreciated by around 5% this year. There's different measures of how you can make the depreciation, but it's around 5%. And unfortunately, I expect another 5% depreciation next year as well. What's going on there? Well, part of it is the FX reserves that I just mentioned. Next year, I actually believe that the US economy is going to be much more resilient than most people expect, partially because of this K-shaped thing, and also because of all the tax cuts that Trump's made. And it's not really nice that they're borrowing and spending, but it does boost the economy. They've made some changes about the tax deductibility of R&D, et cetera. That's a whole long story by itself. But basically, the US economy will be stronger than most people expect next year. The consensus right now is that the US dollar will go down next year. So please remember that I told you this right now. The dollar is going to go up next year, not down. I'm quite certain about that. Unfortunately, that will put more depreciation pressure on the dong. But the main thing as far as the dong is concerned is that all the government stimulus that's happening is fabulous, and it helps to explain why the stock market is up so much. The thing is, though, when you really step on the gas pedal hard, when you're really, really stimulating your economy to the point that it's almost can't sort of absorb how quickly the stimulus is coming, kind of like that infrastructure story I mentioned before, if you look in hundreds of years in different countries, in that kind of a situation, there will often be kind of a release valve when there's so much stimulus coming into the economy. Typically, the release valve is inflation. I'm not worried about inflation in Vietnam. However, the release valve, it seems, at the moment, is kind of the currency. So that's something we're going to keep our eyes on. Here's some other risks. I didn't put the geopolitical. I can talk about that in the Q&A if anyone's interested. I'm not really worried about this topic of the geopolitical. Another thing that I'm not worried about is this whole trade war story. I expect this topic to kind of fade into the background over the next year, and I think that when we're at this conference next year, we won't really be talking about that. Now, why did I use this kind of cartoon of just sort of it quietly going away? Well, we made a prediction at the time that the tariffs were being negotiated that, when the 20% number came out, yeah, you'll see like over time more carve-outs, exemptions, special case, blah, blah, blah. This came out yesterday. You can see here that, they start talking about, as Don mentioned, products being exempted from tariffs. For me, this is a way for the Trump administration to kind of gradually back off this whole topic. Now, that might sound surprising what I'm saying because, just a couple weeks ago, Trump was talking about like 100% tariffs and blah, blah, blah. My interpretation of that is I think about like an animal being in the corner or like maybe a pufferfish or something like that, when it's really threatened and it tries to make itself look really big, 100%, But the reality is the Trump administration, they don't have the cards in the trade war. They don't have the upper hand. So remember, Zelensky came to the White House a couple months ago, and they had this very contentious meeting where Trump kept saying, you don't have the cards, you don't have the cards. In this case, it's the US that does not have the upper hand in the trade war, mainly for two reasons. The first is the amount of products that are imported to the US is just too big. You can't reshore the production of this. You can't make America great, like literally in a couple months. Over 90% of consumer electronics are imported to the US. We have here, you can see the Vietnam and the China put together very, very high proportions of, certain products. If you put tariffs on that, or if you really aggressively put tariffs on that, then what's going to happen is, your voters, Trump basically got elected because of inflation, if we just be really blunt and honest. And what you're going to do is you're going to alienate your voters, okay? So there is an increasing recognition. This is from the Economist magazine, I think this week or last week, talking about this idea that, so that's one phenomenon because the source of, we're limited, you can't just move the production. But the thing that a lot of people are talking about, of course, is this whole rare earth story. That I mentioned Zelensky before. You may know that the flow of arms to Ukraine, they're kind of trying to limit it or dampen it. Part of the reason why is because the US stockpile of a lot of weapons is running low, and that in turn is because they can't get the rare earths with this whole China type story. China absolutely dominates rare earths, as you probably know that already. One other topic, and there's a lot more we can talk about this the 40% transshipment you might have heard about, that's not important. I can talk about that in the Q&A if anyone wants. Let me just say one more thing about this topic before we move on. If you go to Google and you type in my name, Kokalari, and you type in like Trump, tariff, something like that, a Wikipedia page will pop up. And this is, I think that's titled like Trump 2.0 or Trade War 2.0 or something like that. Anyhow, I don't know how Wikipedia type stuff works. I don't have any experience with that. But what you'll see in that Wikipedia page is that work that we did here at VinaCapital is referenced. That's one of the references they used to write this view about how to look at the trade war. So international economists, they're taking seriously our ideas. They seem to agree with it. And that's, I think that's probably enough on that topic. We'll have a Q&A session. Okay, the next thing that I have that I put on the risk slides, we weren't quite clear how to think about this. It's a kind of risk, but it's sort of more of a long-term type risk. And that is that Vietnam does not yet have an investment-grade credit rating. So all the very ambitious infrastructure spending, that's going to require like borrowing US dollars if you want to do high-speed rail, nuclear, this kind of stuff. So I think what you'll see next year is a lot more focus on getting up to an investment-grade credit rating. This is a presentation that Fitch did a couple of months ago. The circling is ours. We did that. I'll tell you the long story short on this thing, which is that Vietnam meets many, or maybe even most, of the quantitative criteria to get a credit rating upgrade. What we're missing is qualitative things, like, for example, making monetary policy in the State Bank of Vietnam work in kind of a little bit more orthodox way. This is a topic people call the plumbing, making the plumbing in the monetary system here a little bit more similar to other countries, things like that, policy stability. So those are things that need to be addressed by reforms. And we think they will, because when the urgency of this comes up, they're going to have to focus on this. And on the topic of reforms, now we come to the Doi Moi 2.0 reforms. I will mention up front that I'm the one that actually coined the phrase Doi Moi 2.0, but I came up with it 5 years ago. You can look on our website some old webinars that Eric and I did way back when. And frankly speaking, I was wrong. If you're too early, then you're wrong. Because at that time, there was the idea of reform sort of floating around, but there wasn't really the urgency or the intensity. And that's what's different now. They're very serious about making the government more effective, and they're very serious about making it more of a level playing field between the SOEs and the private sector, as Don talked about in his intro. I'll tell you two things that I think about myself when I think about the reforms. And the reason that I have these two little mental frames in my mind is because there's so much information coming out on this topic. It's almost like drinking from a fire hose. Every day is some more announcements, more decree, more goals. So I think there's two things that are really important to know. And the first Don really covered great already, which is that there's a major mindset shift going on within the civil service. When we go and meet senior people in the government, they have much more of an sense of urgency than they ever did in the past. They really listen to our suggestions, they take notes, and all the things that Don kind of alluded to. So this is the first thing. It's a major mindset shift. And the second thing that I think is out of a framework to think about all this is that they're setting some really big, ambitious goals. This is a book, some of you may remember, you're maybe around my age, but this is a book that was very popular in the 80s and the 90s. And it was written by a business school professor at Stanford, which is where I also went to business school. And the idea of this book was that companies can flourish, and I think it works for countries as well, but companies can flourish by setting very big, ambitious goals without necessarily knowing all the precise details of how they're going to get there. And so I think this is another mindset we should have in mind when we think about the reforms. I've worked in Vietnam for almost 20 years. I've lived here for almost 20 years now. And what I've seen over and over in this society is that when everyone kind of aligns and points in the same direction, by the way, it's an unpleasant topic, but to the sand thing this morning, think about winning the war, for example. When the whole society points in a particular direction, they're going to achieve most, if not all, of the goals that they're out to do. So I think these are the two things that I think about. There's a third thing, which is for you as investors that's very important to know about. I mentioned in my very beginning of my presentation the idea of the rebalancing. And so here there's a different type of rebalancing happening over the long term, and that is a rebalancing between the FDI-driven growth and the domestic-driven growth. FDI today, right now, is the country's most important economic growth driver. There's nothing else that's close. Foreign capital is the most important driver for Vietnam right now. What we expect to happen as more of the reforms kick in is, again, a kind of rebalancing where we're driving, sort of equally by both the domestic private sector and by the foreign investment. Why is that important to you as investors? And Don kind of alluded to this already in his opening remarks. When Samsung sets up a factory here and manufactures phones, that's great. It boosts employment. It helps lift people, into the middle class. They can afford to send their kids to school, et cetera, et cetera. But when you think about the economic value that's created by producing smartphones here, part of that economic value gets shipped back to Korea, right? So when you have a more balanced approach to the economy, more economic value will be captured here, but critically for you as investors, and Don really nailed it in his opening, there'll be a lot more investment opportunities. Because, the Samsung phone story is fabulous, but as investors, we can only get sort of indirect exposure to that. Invest in things that the consumers that like, that have a job there, et cetera, et cetera. So especially on the private equity side, there's going to be a lot more investment opportunities going forward. So these are really the three things that I think about the reforms. Major mindset shift, big audacious goals, and rebalancing of the private and the domestic private sector and the FDI. So that opens up a lot more investment opportunities. That's the big picture. I'm going to talk just a little bit about some of the details, and we're going to, of course, cover that in much more depth today. These are the so-called 4 pillars that have been discussed a lot. You may have seen that in the newspaper if you follow Vietnam. They've actually added a few more to this recently, But today, as Eric mentioned, we're going to have different presentations and breakout sessions to go in more depth about these, the 4 pillars. For the government reforms, I think the most impactful thing that's happened so far is they're really pushing more power and spending to the local level. And when you think about it, this was one of the big successes of China's development strategies. A lot of things were happening at the local level. Before this merger of the provinces, the province size in Vietnam was subscale, as you can see on this chart. The other thing to note is that this idea of spending, of pushing more spending to the local level was kind of already happening. So in a way, we can think about the reforms as a continuation of some things that were already happening. Similarly, on the private sector reforms, you can see here that there's been a big move over the years to push more of Vietnam's investment to the domestic private sector. So here, too, we can think about this as sort of a continuation of things that were already happening. Lots of focus on infrastructure spending. The idea here is to get up to 10% of GDP of infrastructure spending, comparable to what places like the Philippines and China were doing when they were really pumping on infrastructure. Lots of important projects happening. Why is all this happening now? So I mentioned I was too early when I came up with this term, doing my 2.0 5 years ago. First of all, I think there is a really good recognition within the government. Those that have attended these conferences or followed my work in the past, you'll notice that what's conspicuously absent is one slide I always love to include is about the demographics. I don't have that in this year's presentation, but the story about the demographics in Vietnam is basically we have about another 10 years of really good, strong demographics. But after that, it's going to roll over, and demographics will switch from something that's pushing us up, to pushing us down. The technocrats in Vietnam are very smart. They know this. They know we have kind of a window of opportunity to really put some measures in to put us on a higher orbit in terms of the GDP growth. That's one thing. And of course, you know, with everything going on, there's a real recognition of the vulnerability of the country to be overly exposed to the global economy. So those are the 2 main things. The other thing is I think that there's more of a recognition of the main Achilles heel in Vietnam is that we're getting all this FDI, but it's not really boosting productivity. And the reason for that is because what people call spillover, sometimes they call it linkages, backwards linkages, forward linkages. So we've got all this fabulous FDI investment, and it hasn't really spilled over enough into the domestic economy and helped to spawn new industries here. So our hope is that the reforms, and that's part of the intention, will help to solve this problem. Okay, the very last topic that I'm going to cover today is something very, very close to my heart. I'm very, very passionate about, and that is about artificial intelligence, AI, in Vietnam. Now, over the last year, there's been 2, for me, I consider very important developments on the topic of AI and Vietnam. And the first is, if you go to Amazon and you look up this book, this is the #1 book in AI in the world right now. And it was written by a Vietnamese woman who grew up in the countryside here. She got a scholarship to study computer science at Stanford, which is where I also studied computer science. And now she's this super big person in the field. And people are saying, like, hey, is there something in the water in Vietnam? Because they start to notice, like, there's a lot of people in this field, both VQ and Vietnamese that studied overseas, that are really making an impact on the field. So I think, this is one thing that kind of caught a lot of attention among foreigners. Foreigners asking. There's a very, very famous guy, his name is Richard Sutton. His people reached out to me and said, hey, we want to come and visit Vietnam, to see what's going on here in the AI scene. And the other thing, in AI, people are very focused on what they call the labs, like the frontier labs, where the real nitty-gritty research is being done. There's a great lab here that's doing really leading-edge work. It's on something called edge computing, so leading-edge computing. It was also set up by another Stanford guy, and that lab was recently acquired by, earlier this year, was acquired by Qualcomm. Qualcomm bought this lab not not because of like some charity or whatever, but because the work that they're doing is really fabulous, and they wanted to be able to tap in to that. So these, for me, these are two things that I think were really significant in AI as regards to Vietnam. For myself, personally, I will tell you that I have been spending like all of my weekends and all of my mornings and late nights really delving very, very deep into this whole topic. I mean, it's super interesting, you know, for me as a kind of a nerdy, geeky guy. I'm doing a program at Stanford, which is called the Professional AI Engineering Program. Takes about a year. And this program is meant for people like me that studied computer science kind of a long time ago, and they want to get up to speed, you know, up to, basically, it's pretty hard. We're studying at about a PhD level. I've got fabulous classmates, the CTO of NASA, all kinds of Google, Amazon, et cetera, people. And the reason I'm mentioning that is because I'm actually now in a better position to tell you in a more nuanced way why I think Vietnam is uniquely suited for AI. So I think what I'm expecting is a lot of fabulous businesses to develop here, particularly that can then export or sell products to the rest of the world. So I want to tell you, give you a little bit more nuanced insight. You know, I don't want it to be like just typical big mouth American guy saying, you know, hey, it's going to be great here, everything's going to be great. You know, the Americans, you got to divide everything Americans say by 2 because they over-exaggerate. Maybe I do a little bit too. So let me just tell you a little bit more precisely why I think it's going to do really well here. First of all, we have very strong STEM ability here. You already know that if you know anything about Vietnam. This is a math class that I taught years ago at the National University. I don't know if you can see it. It's a bit whimsical, but I typed something into ChatGPT here. I said, what are the countries in the world that you will see the most trees have a number painted on them, you know, on the main boulevards or whatever? And it just pops up right away. Oh, Vietnam, you can see trees got numbers on them all over the place. So for me, that's kind of like a loosey-goosey way to think about, you know, we really have a left brain orientation here. However, what I want to do now, I'm going to end on a slide where I talk, it's a bit geeky, but let me explain why Vietnam for AI. To be successful in AI, you know, you think left brain, STEM, you know. Actually, within the left brain, there's different parts of your left brain. The same for the right brain. You think of the right brain like music, literature, this kind of stuff. So within the left brain, there's mathematical skill, being able to solve equations, okay? Who's good at that? Russians are really good at it. French are really good at that. But actually, the honest truth is nothing really in AI has come out of those countries. So that's one type of left brain ability. The other type of left brain ability is a kind of algorithmic thinking, you know, thinking about how do you optimize things, put things in the right order, this kind of stuff. And actually, Indians are really, really good at computer programming. Think about all the outsourcing, you know. But here, too, nothing in AI, not much has really come out of India yet. And I think, this is my theory, you know, from having really studying this thing like crazy over the last almost a year now, is that you need in AI a confluence of both of these type of skills. You need them both together to be good at AI. What are the countries that have both together? China, obviously. The US, I mean, there's so many people in the US, we have kind of everything, but we also have very good algorithmic. There's something in the US that was called scientific management or Taylorism. It's like almost 100 years old. So we have that kind of thinking already. Vietnam. Vietnam really has both sides of this, what's required. And that's why I think you see so many people punching above their weight that are from here. And here's an interesting one too, by the way, Sri Lanka, for whatever reason. They also have a lot of people compared to the size of the country, you know, that are prominent in this field. So they kind of have this mixture of both sides. So this is the concrete reason why I think the AI is going to do very well here. It won't surprise you that we're having a lot of talks internally about different ideas and projects. And so if there's anyone that's interested in investing into this, please definitely come to see me, come to see Trung on our venture capital fund. If you want to make 10 times your money, I mean, this is the type of opportunities that are here now in Vietnam. And I'm going to end on this little cartoon. My intern made this in 1 hour. That's AI. Okay, let's open it up for questions. Either about the economy or anything on AI. You can ask me a lot of technical, like why doesn't my ChatGPT work, or maybe I'll be around at lunchtime or whatever. But yeah, please just go ahead. Let's open it for questions. I know I talk fast. That couldn't be, someone must have some question. Yeah. Yeah. Yes. Yeah. Yeah.
Yeah. Do you think that these supply chain will be established in Vietnam?
You are exactly asking the right question.
Michael, can you please repeat the question?
It's the supply chains to support the, what about it's one thing to say we're going to make all this stuff here, but what about the supply chain? If you look on our website, during the first trade war, we actually published a series of reports on this. What we did is we went back and we looked at the evolution of the Thailand, Singapore, Mexico. It's the same pattern, which is that the multinationals, they see it as in their own interest to build out the local supply chains, the tertiary. So they're not doing this out of charity. They think like, okay, we want to put our FDI here, but we want to get more local suppliers. So the pattern that we've seen, that we studied, you've seen over and over, is that the multinationals come in and they do things like investing in local suppliers, seconding their management to local suppliers. When we were doing this research, we looked back at what was going on in Singapore in the 1980s. People have a very exalted view of Singapore, which they should. I mean, it's amazing what they've accomplished. But if you look back at these kind of Harvard Business School case studies back in the 80s, actually Motorola and other multinationals, they thought their local suppliers were terrible. So they took all these extra efforts to build the capability. We've already seen that starting to happen here with Apple in particular. Some of the products, there was an earbud thing that they started making here a couple years ago. When Apple made the earbud, what they did is they set up a factory in China and also in Vietnam at the same time. What they had done previous to that is they perfected the production in China, then they cut and pasted here. This time what they did is they said, why don't we run the two of them together so we can start building the capability. Actually, on this most recent batch of products, they're just making them here only before doing anything in China. So there's a concerted effort by the multinationals out of their own self-interest to build the supply chain capability here. It's a really good question. Yeah, sorry. Or if you shout it out, I can repeat it.
Can you talk about the stronger US dollars?
Yeah. Yeah, okay, so basically, long story short, what the Trump administration has done, which is not great from like a long-term point of view, but basically what they've done is they've made it so that if you build a factory or you do R&D, it used to be that you had to write off that expenditure over 30 years. And they said you can just write it off all at once. So what we're seeing already, and it's not just data centers, is a boom in investment. So that boom in investment means that capital that would have fled the country is going to stay, more capitals. And you think about the whole strategy of the trade war stuff. I don't want to go down that rabbit hole of saying like Trump's playing 4D chess. He's not. And he's very erratic, and it's not good for the world. But if you think about, there's a kind of genius in all of this, which is that if you simultaneously tell the rest of the world, like, hey, I can hit you with a stick anytime you want, but if you build a factory here in the US, I'm going to give you all these amazing benefits. So this is what's going to attract money back into the US. And that's why the dollar is going to go up next year. Not huge. It will probably go up by something like maybe 4 or 5%. But the point is it's not going to go down. And unfortunately, for Vietnam point of view, that will put additional depreciation pressure on the dong. So, but it's a really good question. Yeah.
Thank you. Thank you very much. Thanks for a very nice, interesting presentation. I don't know exactly in detail what happened last week with the bond market and how the stock exchange collapsed, but how much should we be worried about corporate governance for these reforms and what you're talking about the next 2.0 to realize?
So for me, that one slide about like setting very ambitious goals is the main thing that I keep in mind. And for the rest of the details, I think you're better off, my local colleagues will be better to answer that question.
Hi. You mentioned that Vietnam has only 10 years of good demographics left. Can you expand a little bit on what you mean by that and what are the repercussions?
That's a great question. Oh, sorry,
question
go ahead.
one. Sorry.
Yeah.
And question two is, this is a fantastic growth story, right? Any investor listening to this is like, oh my gosh, what would you consider is the biggest risk to derail this story? Yeah,
that's a great question. So on the demographics, there's lots of different ways of looking at demographics. What we look at, there was a guy from Harvard that came up with this, is the idea that if you look at, and this kind of reflects that my background is more like an engineer than a traditional economist. If you look at, in any country, if you look at the number of people that are around the age of 45 to 50, just absolute number, nothing fancy. If you take that to sum it up, if that number is going up, you're on a secular upturn. Why? Because you have more and more people that are at the peak of their earnings and also the spending in their life. It's a very, very reliable indicator. And when that number, absolute number, rolls over, then you're on the other side of it. So I'll ask you a question back. When do you think, for example, that number peaked in, for example, Japan or Korea? Yeah. So in Japan, it peaked precisely at 1990. That's when the bubble collapsed. In China, it peaked at around 2015. By the way, this is what we often get asked the question, like, oh, you have all this FDI coming in, but what if what if Korea someday, because half is like from Korea and Japan, what if someday they decide that they don't like Vietnam? They don't have any choice. Their demographics have rolled over, and you've seen a surge of investment into Vietnam, particularly starting from Korea, starting from around 2015. Really good question, the other point you made. The short-term risk would be the dong. They need to really get busy with this credit rating because I don't think and I think there'll be more recognition of that next year of, so the government's finances look okay, but you're going to need foreign currency, so they'll really need to get busy with that. And overall, I would say it's just, okay, in all the years that I've lived here, there's been something, I forget what they call it in the World Bank, or it's like when you're the poster child for the development agencies. They all come here and they all tell you like, wow, you're so smart, you're so great, and then you lose your motivation to follow through. And I saw that during the time that I was here, and that's a little bit my worry is complacency. So I don't see any risk of any blow up. There's no, like, you're not going to be Indonesia, like lose it. But what could happen is that instead of achieving our potential, we subachieve it because they lose the will or the momentum. And Don is much better to talk about that than I am.
We're already over time, but we have one more.
Hold on, I think we have one more.
One more question over here.
I saw one more someplace.
Hi, I wanted to ask about the 28% growth in exports to the U.S. And if you break down why that occurred, how much of that was basically pull forward because of tariffs versus...
Did we plant these questions? This is a very good question. Okay, in the beginning of the year, it was pull forward. And in fact, what's interesting is many people, including myself, did not expect Vietnam was going to get targeted by Trump. So initially, when the 46%, the Liberation Day, initially I looked really stupid because I was like one of the ones saying, don't worry, it's not going to happen, right? So what happened at that time is there was no pull forward, and then all of a sudden, boom, it just shot up, right? What we thought was going to happen is once the actual tariffs kicked in, that it would roll over and we'd go negative. And that hasn't happened, and it's literally because of the high-tech stuff. I mean, this is the number one. All the other garments, okay, furniture, maybe the tariffs on furniture are kind of extra, whatever, but it's really a story about the high-tech exports. This is it. It's really not more complicated than that. I'm getting told to...
I'm not saying you got to go home. Okay.
Well, I will be around.
Thank you very much, Michael.
All right.